Should we buy or sell gem brands? So first off, read this disclaimer carefully. Here is the company's website. We have a recipe for good. We are building the world's most loved, trusted, and fastest growing restaurant brands in partnership with the best franchise operators in the business. KFC, Pizza Hut, Taco Bell, and the Habit Burger Grill. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. Gem Brands is 24% from the 52-week low and minus 7.5% away from the highs. Here is the chart, weekly data points, and we can go pretty far back. Way back here to... Oh, we can really go far back. We can actually go way back to 1997. Since it went public, you would have gained 2,149%. There's definitively been bear markets throughout, and recently, Yum Brands is behaving a bit erratically because all of a sudden here from 27th of December 2021, and we are currently in December, it all of a sudden had a whopping bear market of 26%. Recently, it's been very bullish. It's been roaring higher, finding support here at the 200 weekly moving average. Looking at the daily data points, we are seeing some signs of exhaustion. Let's look a bit at RSI and the PPOs. So on the weekly data points, RSI is pretty high, not extreme. Looking at the 20-week per PPO here in purple, we are definitively at higher risk levels. And when we go to the daily data points, we can see that we recently reached a level that has a tendency to trigger pullbacks. So RSI went all the way up into 77-ish. Back here, this is this rally. We also got overbought, and that triggered the big bear that we had back then. Here also we got overbought, and we really saw a pullback. So there's a bit of a pattern here. When Gem Brands really gets overbought, it can lead to some self-reinforcing sell-off. I will give the bears 5 points on the technicals. We are certainly overbought. We recently saw a very big rally, but it's getting a bit spooky here for the bulls. They've pushed it pretty far. So you have a setup where you have bears who want to short, and also you got bulls with big gains. They want to protect those gains, so there's definitively a lot of stop levels. Not that far below us that can be triggered, and then you will get a self-reinforcing effect. Next, we look at the seasonality. So to the left here, we do see that in green over the last 5, blue the last 7, red the last 10, Yum Brands usually sees some seasonal strength into late December, but then we see a weakness. To the right here, we can see that December going all the way back to 2003. There's more red than green. But when there is green, like in 2008, all of a sudden a big green month, in 2021, 12% gain. So December can be very strong, but if we were to remove those super months, then it would be a pretty bearish month. And January is pretty darn bearish, as you can see here. So the seasonality is more bearish than bullish, at least for the coming months. And the coming months are most relevant to us. I do think I will give the bears a -7 here. Next, we will look at the fundamentals, like that. And we will here compare Gem Brands against itself. So this is a way that I really like to do fundamental analysis, because you can, of course, compare it to the industry and all of that, but it's most relevant to compare it against itself. And when you look here at price earnings as an example in green, you can see that we are at a very high level. We usually don't go higher. There was a little bit of a period here where we went higher, but Not that much later, you did see a pretty significant bear market here for gem brands. Looking at price to sales, we are also relatively elevated. So that's a risk. When we look here at the forecasts, and we have 22 analysts with a 1-year price target. Average target is 6% above us, highest is 24% above, lowest is 7-ish% below us. So the analysts are feeling that there's some upside, a 6% upside. Let's actually compare and see what that would mean. So if we were to go up 6% from the current levels, that actually wouldn't be enough for us to get a breakout. To get a breakout, we would have to go up 8%. So with the 6%, you basically have a test of these highs, which is a topping pattern, a double top. So a person that combines fundamental analysis with technical analysis will not be really attracted to a 6% potential upside, when that basically means that we will have a topping pattern. So I would say that the fundamentals here are bearish. I think I will give the bears a -4 in this case. In this case, when we look at relative performance, I will compare Yum Brands with the ETF Eats, which is very relevant. It's a restaurant ETF. Here we have long-term correlations: 94% with S&P 500, 82% with XLI, which is the consumer discretionary ETF. And going to a restaurant, it is a discretionary expense. We don't get anything on the Eats ETF because we don't have enough data. On the daily data points, 50% with S&P 500, -1% with XLI, so almost no correlation at all. We do have 55% positive with Eats, much less than I expected. So there is a disconnect here between Gem Brands and Eats. But the ETF that has the biggest effect on Gem Brands is Eats, EAT, like that. So let's look at the chart. So with the weekly data points here, we have seen some solid rejection here from the green 50-week moving average. On the daily data points, we had a bit of a peak above the red 200 daily moving average, but now we have broken below all the moving averages. So, that's a bit of an issue. I don't think we are oversold yet. Let's look. No, we are not oversold on the dailies. So it's not like we don't have a signal to buy. Let's quickly look here at the seasonality. We have so little data, so we can't really jump to conclusions here. So let's now compare Gem Brands with Eats, like that. EATs. Yeah, I think we will stick here with the daily data points. There seems to be time cycles, so let's investigate how reliable the time cycles are. Yeah, something around here. In that case, we are approaching the mid part of the rising phase, and there's a major declining phase into April of 2023. During this rising phase, we peaked towards the middle. Here we peaked a bit early, here we peaked late, so that has differed. Looking at RSI, we recently were relatively overbought. The previous time we were very high was here, and that initiated a protracted phase of Yum Brands underperforming the restaurant ETF. Here as well. So these are some ominous signals. So on relative performance, I will give Yum Brands a -6. The bears really have some numbers here. -5.5 to the bears. We are overbought. That is the main interest signal. Always, of course, use a stop loss. But the data here is simply bearish for Gem Brands. Obviously, it is fully possible for it to go on a run nonetheless. But the dynamics here in the minds of the investors and the traders is that the bulls will tighten their stops due to these data points, and the bears will build some positions, and that increases the odds of the security going down. We have some time left to look at the components of the restaurant ETF. Uh, so on the top is Arcos Dorados Holdings. Not a stock that I have even heard about before, but it is the biggest, 10.10%. Looking long term here, we are emerging from a bit of a rounding bottom formation. In this case, we do see that the green 50 week moving average is definitively a pretty solid support level, like a buy and the buy and the buy. That is good. So this stock is consolidating. So let's look a bit here at the dailies. Yeah, a lot of up and down, up and down. So a major conflict between the bulls and the bears. Do we get some information here about it? Yeah, so the firm operates and franchises McDonald's restaurants in the food services industry through its subsidiaries. Okay, so that explains why it is on the top of the list. Okay. Yeah, seasonality recently for December, going back to 2017, it's been bullish, but overall, December is definitively not a bullish month. January is also rather bearish, and February is bearish as well. So, and when you look here to the left, it is pretty bearish. Looking at the fundamentals here, price book is definitively elevated. Price to sales a bit more midish. Yeah, let's have a bit of a quick look here at some analyst price targets. So you do get a 2% yield. So the analyst price targets are very bullish. The minimum upside price target is 6%, 35% is the average, and 59% above us is the max price target. That's interesting, but the issue is that the seasonality is just bad. Technically, it's more bullish than bearish, but it can be very frustrating to be stuck in these kinds of patterns. It could take like a year for this to resolve. It could be right around the corner. So it's technically rather noisy. Next on the list is RCI Hospitality Group, Hospitality Holdings, yeah, on the Nasdaq. So in this case, we have a new all-time high. Okay, so in that case, I immediately want to see whether there's anything left in this rally. Looking at MACD, it has been higher before, but it's historically very high. RSI, we see that weekly RSI usually goes higher before we have major corrections. Let's go to the daily data points. When it comes to smaller corrections, we are at those kinds of levels now. Accumulation distribution here is deteriorating, which shows us that there are sellers now that are dominating. Looking at the seasonality for December is pretty bullish. We are still in December. January, recently it's been more on the bearish end of the spectrum. Let's look at the fundamentals. So price book in blue is pretty high historically. Price to sales also very high. The PE is also a bit elevated. If we go here to the forecasts, 4 analysts are covering it. Yeah, 7% minimum target. 28% is the max. Well, 28% is the average, and 50% is the maximum price target. So the fundamentals, I would say that compared against itself here with these historical data, I would say it's a bit bearish. It's elevated. The seasonality for the current month is not really that bad. January is potentially an issue. Technically, we are very high, so rather overbought. Um, but there could be a final push left. But this is a very mature rally, so it's towards its end. But anyway, we have looked at Jump Brands. We have looked at some of the stocks in the restaurant ETF, and overall, I do think that this is a time to have some caution, to have a nice mix of bearish and also bullish positions, because um, there are so many unknown factors out there that very quickly can shift the market in a bullish or bearish direction. So yeah, market neutrality is definitively the safe haven now.